Okay. So I said when I see my direction on the weekly time frame, the next thing I do is to go over to my daily time frame to get more details. Now, as you can see, can you guys see my screen? Are you seeing the screen?
No.
Okay, check now if you can see my screen.
Okay.
Yes, confirm.
All right. Now, as you can see on the weekly time frame, you assume like that this candle is already touching this trend line, right?
Yes.
It's almost like it's already touching it, but then it's not touching it yet. So when you come down to your daily time frame, you see more of that. And it may look like it's very small, but really when it comes to Forex, it's not small. You know, from where price is right now to what is remaining is about 17 pips. Is it 17 or 13? 13 pips. Sorry. 23 pips. So that 23 pips alone can make somebody to receive what they pay others for 6 months. It's not small at all. So when I get to this daily time frame, what I want to do most times is to ensure that the price gets to this very point before I begin to look for entries. So now all I will need to do is to place an alert on this to instruct my app to ring me up whenever this line is touching this, whenever the trade is touching that line. So when that happens, that is when I will send you guys the signal to the group. Now, what I expect you to do when you get that signal, because what you'll be seeing is something like this. And in Forex, there is color code. So whenever I send you a signal, even if I don't put buy or sell, when you see your color code, just know what those things mean. Your blue line is your entry price, your red line is your stop loss, and your green line is your take profit. So even without telling you, without putting much details, you know, it's only when I want to post something on social media that I just like to put those things so that people who are new to it totally will see it and then understand. But for you, if I'm very busy, I just want to send it in very fast. I may not put all those things. With line alone, you should just understand what it means. The blue line here simply means that by the time price gets to this area, 128.90, I want to look for my buy and enter. I want to look for my buy and enter the trade. So now, then of course the red line simply means I want to go out of the trade if this red line area is hit. So if I drop a red line here, it simply means that that is my stop loss area. If I drop my green line here, it means that is my take profit area. Now, when I drop a red line or a green line on daily or weekly charts, understand these things so that with time you will not be asking these questions. Be focused on more important things. If you see a red line or a green line on daily time frame or weekly time frame, I'm not telling you that every single entry you are taking, you will be using those numbers you are seeing there as your parameters. Like for example, now you are using your blue line to take entry, of course. Now your red line from the current price here is 129.11. Are we seeing that?
Yes.
Okay. Now, the red line, I can place it somewhere around here, maybe 128.58. I'm not telling you that you should take a trade and put your stop loss price at 128.58. because that means you'll be risking about 42 plus 11, 53 pips. I'm not telling you to take a trade and risk 53 pips on this. No, I'm only telling you that overall view, this is my overall stop loss, 128.58. It means that if this candle keeps coming down and gets to this point, then I am no longer bullish bias. I probably want to start looking for sell. After confirmation, then I'll be saying, okay, I'm now selling this pair. By that time, we'll change this thing all over again. Gray line comes somewhere here, then green line comes down somewhere around here. By that point, we'll be saying we're looking forward to market going south. Now, if that doesn't happen, if these guys are still like this, then it simply means that if I post this thing here, I'm only telling you that the overall view of these things, overall stop loss is going to be 128.58. Now, it means that if you are taking your trade using your lower time frames, of course, your individual entries will not be, no one will be going lower than the 1.2858. Let's go back. Let's go down to the lower resistance so I can understand that one very well. The weekly time frame and the daily time frame, they are looking for directions. Now we've already established that Euro US, Euro JPY is on a bullish direction because we've just completed a bearish section by market backtesting this guy. So this is bullish. And then very soon, after about addition of 23 pips, we'll confirm our bullish trend for Euro. Now, confirming bullish trend takes us to the point of knowing whether to enter the trade or not. Of course, if not, it has not completed yet. That's why you still see my trade. This particular entry was taken here. That's why you see entry here, stop loss up there, and then my TP is down here. By the time this guy touches there, that means I'm done. This will be my last trade, my last trading session for Euro JPY. Now, by that time, I'll start looking for buy entries. So everybody who has been selling this with me, by now they should also be closing their trades. Now, by the time we get to 4-hour time frame, 4-hour time frame is used to check whether price is on a low or high price. It means that if I am bullish bias on, let's assume that we want to start buying. Let's assume that this that candle on daily time frame has actually touched that line. So we have decided to start buying. Now, I cannot buy. Sorry, if you want to start buying, that means this guy is on a low. It means that for the price to be selling to this point, there is no point lower than this area currently, right? The current point where the price is right now is the lowest point, isn't it? Okay, you guys are muted, so.
Yes.
Okay. So there is no lower point. It means that this is a low point, so one can actually buy low from here. That is, we're assuming that this guy was touching this daily time frame. Okay, if he's touching this point at this, if he's touching this line at this point, and then on our 4-hour time frame, we can see that this guy is actually at that low level. There is no other candle, you know, after there's no other candle higher than the lowest low it has created. Then we can say this guy is set for buying low. Let me show you something. Let me show you what I mean. Let's assume this candle here. Are we seeing this last candle here now? Up here. Are we seeing it? Somebody should unmute the mic. Zeno, unmute your mic.
Yes.
I will know that you guys are hearing me. Okay.
Yes.
Now let's assume that this candle is the last candle that is forming right now. If this is how to determine whether you are low or high, it means that the market has created a low here already, and the market has created more candles after this low was created. a low has already been created at this point. So if I was not in the market at this time, because I want to buy low, since I am bullish bias, I want to buy low. The market has already created, and I was not online to take this trade. Let's assume when I came online, that candles already forming, candles forming already at this level. This is what it means not to buy high. Because I've already, from this point to this point is a whole lot. So if I post a trade, or you already know that the market is bullish, or sorry, a particular pair is in trend, but you're busy and then you came online and then you saw your chart like this, the market is already forming at this level. You are seeing this candle forming here now. It means that you have missed this area, which is low price for you to buy from a low point. So what I try to do is and see if market will scale down. Are you seeing what has now formed here? You can see more candles are here.
Yes.
Fine. So this is what it means to buy low. So if you miss this entry, you cannot just come here and place your trade and say, because I told you people that market is bullish, then anytime you come, just like you just start buying and buying nonsense. You need to wait until you see another low price form, and then you can buy from here. That is what it means to buy low. So you must be very careful. I know sometimes going into the trade can be very exciting sometimes. Everybody feels the rush, they need to want to enter a trade. It is when you're not losing your money that you will now start feeling, very angry with yourself for taking the trade at all. So it's not enough for you to just rush into the market. You need to know when you are getting to the market. You don't just get in whenever you like. You plan it, especially when you are working with prop firm accounts, because by the time you have some little drawdowns in your account, the account will just block you out and tell you have defaulted, and that is all for the account. You have to go and subscribe all over again. So you must know how to avoid these drawdowns. That's why I said you must learn the principles of buying low and selling high. Now, the 4-hour time frame, back to the beginning of what we're talking about. Now, I said by the time this guy touches this last TP area, then of course I will be totally done with this bearish sequence, and I'll be looking towards buying. And that is what brings us to our last chart, which is the 1-hour chart. That is actually where I use that's where I take my entries from. So your weekly time frame is to check your market direction. Your daily time frame is to analyze more on what your weekly is showing you. Your 4-hour time frame is to show you if price is actually low or if price is high. And then your 1-hour time frame is for you to take your entries. I'll be teaching you guys several methods of entries. So anyone you wish to, once in a while, you can use them to take your trade. And you are several persons, please 1 minute. And here. Just take anyone there and go. All right, so now when I post these directions on the group, what I'll be posting most times is maybe the weekly or the daily time frame. Now for the entries, which is the 1-hour time frame, I'll be posting as well, but like I said, I might not be able to post all the time. But then you should already know what to do, which is you already know the direction. All you need to do is to wait to see a low price and then you take the direction, or you see a high price and then you take. So let's assume that for a pair now like Euro JPY, like I said, is bullish. So if I post that on the group, it simply means that whenever you come online, what you want to be looking for is an opportunity to buy the market. Take it back, take it back. So when you come online, you look for where the market is. If you are seeing a lot of sell candles coming down, you'll be looking at where the next support is. When I say support, this is what support means.
Wow. Is that really what support means?
Go. Go and get your mom to open to for you. Close my door.
That's nice, Daddy.
Yeah, thanks. So what that means is when I say support, I mean something like this. Let's assume the market is coming down all the way from this area. In fact, this market is just selling since, so there's no strong support to even. Let me see. Let me go to time. All right. Okay, so what I mean by support is when the market is coming down. Let's assume this candle here is coming down all the way to this point. When it gets to a point like this, you can say, okay, this guy is hitting a support region. And because generally on the group, we are already saying that we are bullish bias, it means that as soon as you see something like this, what you'll be looking to do is to buy from this point. So when you come online, you see this kind of forming, maybe it's coming down this way. You should be excited because you missed the entry. By the time it gets to this point, because this area is now an area of support, you'll be looking to buy. When it buys to a point, you close your trade, wait for it to fall down more, like you see this, like you see what happened here. Like what is happening here now? It bought to this point and the market started selling down again. When it sells to this point, you buy from here again. This is the low point. When it buys to this area, come down to this point, you buy again. So I'll be showing you different ways to analyze at what point do you close your buy if you are buying, and at what point do you close your sell when you are selling. So now let's like I said, let's assume we are done with selling euro, JPY. Let's assume we want to start buying. So since this price is very low already, and I want to buy low, I take my entry at this point. And then I look for the lowest low that has been created. The lowest low that has been formed before the area I'm looking at buying from. What would that lowest low be? Here, right? This is the lowest low that has been created before the market started moving towards where I want to take my entry from. So let's assume I'm taking my entry from here now. The current price of 129.18. I will have to fix my own stop loss 10 or 15 pips away from the lowest low. Currently, the lowest low is giving me a price of 129.02. So I'll count 10 pips away from there to give me 128.90. 128.90. I'll drop my red line here. This entry point is 129.18, and my stop loss is 128.90. This is a difference of 28 pips. Okay. Now, the risk management I run when I am trying to, I do a risk management of 1:3. It means that if I'm risking one for any trade, I'm taking times 3 of it as my target. If I'm risking 20 pips, I'm targeting 60 pips. If I'm risking 30 pips, I'm targeting 90 pips. So in this case, I'm looking at trading this pair. I've already determined my entry price, and I've determined my risk by looking at the low I want to consider and taking 10 pips away from that low. The reason why you're taking 10 pips away from the low is because the market can decide to retrace back and retest this low. So you don't want to put something too close to it. Every day the market takes you out and then start buying, which is your direction. You want to put something that is a bit away from it. That's why some pairs will even put as far as 20 pips away from the low, so that market doesn't take you out prematurely and then begin to go your direction. It's very, very painful. So what I want to do, I've already determined, okay, I will take my buy trade from here. And also I've looked at the previous low that was formed just before my current price. And I've taken my 10 pips away from there. The difference between my entry price and the stop and this red line, which is my stop loss price, is 28. So what I want to do now is to determine my exit price. So I will say 28 times 3. 28 times 3 will give you about 57, right? 57. 57 from this entry price is not going to be my target. So I'll come here and say 129.18 plus 57 is going to give me 129.60, 75. So 129.75. 129.75. So this is going to be my exit environment. Everybody should unmute their mic and point if there is any area of difficulty from what I've just explained. Unmute your mic and ask questions if you need to ask questions. If it's not clear enough. I know I'm fast, but I know this thing is a bit, you should be clear enough. Unmute your mic and ask questions if you know you are not clear. If everybody understood what I just said, then I'll continue.
Sorry. Hello?
Yeah? Go ahead.
You said the red line.
Yes.
Our the difference between our. Can you hear me?
Go ahead.
Hello?
I can hear you. Go ahead.
Hello?
I can hear you. Go ahead.
What is the difference again between the? Yes, I said what is the difference between?
Your network is bad.
Line.
Your network is bad. So maybe you need to type your question on the chat. Send a message.
Can you hear me? Can you hear me clearly?
Yeah, I can hear you now.
Can you hear me clearly?
I can hear you. Go ahead.
Okay. I said what is the difference again between the entry point, which is the blue line?
Yeah.
And I think the red line is stop loss.
Yes.
Stop loss, Abi?
Yes. The difference is your risk.
Okay.
The difference is your risk. From this point to this point is your risk.
What is the difference?
Are you saying that?
Yes, I'm following.
Fine. So I said, if I drop a chart on the group and tell you the market is, this particular pair is bullish, it means that all I want you to do is to be looking for bullish entries on your 1 hour time frame. So if you come in and you see something like this, let's assume we are already on bullish buyers. We're not waiting for that 23 pips I told you about, that I need more 23 pips to go down before I start buying Euro JPY. Let's assume we've already concluded that this guy is bullish and we're already buying Euro JPY, which of course we start from tomorrow because that 23 pips will be hit between now and tomorrow morning. So let's assume this is tomorrow morning. We're already buying Euro JPY and this is my 1 hour time frame. I want to buy this pair. Currently, price is at 1.2917. I place my blue line here to mark my entry point. Okay. And then I will ask myself, what was the lowest low created? The immediate lowest low created before my new entry price now. I will come down to this area. This guy. This was the immediate lowest low created before this buy price I want to take now. So that's what I'm going to use to calculate my stop loss area. I will look for the price of this lowest low. I can tap on the candle to show me the full details, the open price, the high price, the low price, the total details of the candle. Now, what I'll then do is look for the low. The low says is 129.02. Click on my screen, that information goes off. So I'll calculate. I cannot just use that price as my stop loss because it is possible the market may just want to retest that zone. And it will be unfortunate for market to take me out if I put my stop loss there and then market begins to buy to go my direction. So what I do most times, I count 15 pips or 10 pips away. Depends on my risk appetite, how much I'm ready to risk on the trade. Especially when I am also putting some other things into consideration. That is what we'll talk in details later. We'll not go into the prop firm restriction. So you must know how to calculate the risk you can take on your account size and the amount you have on your prop firm account so that you can know whether or not the risk is worth taking. I might take the risk. You might not be able to take the risk if your account size is different from me. Someone else in the group may be able to take that risk, may not be able to take the risk. So why some of us will be putting 10 pips below this guy, some can choose to put 15 pips below it. Some can choose to put 20 pips below it. Okay, that one now depends on individual, decision. Those of us who want to risk more can put more. Sorry, let me take water. I'm coming. So those of us who want to risk more can put more risk there. But I'm just saying that the minimum or the average price, if you calculate from the lowest low, should be between 10 to 15. Now let's assume we're using 10. 10 from this guy will give us 12890. Okay. Now I said for you to know the total risk you are taking on this trade now, you look for the difference between your entry price, which is this candle here, this line here, which is the entry price, and this total risk line you have marked out. My internet is showing me something. Are you guys hearing me? Somebody should unmute and tell me.
I'm with you. I'm with you.
Okay. Okay, I'm coming there. Anel is in his room. Get me Anel. Sorry. Anel. Sorry. So, are you guys still there?
I'm here.
Okay, so now the risk I'm taking on this trade is from this blue line to this red line, which is a total of 28 pips. Now I said my risk reward ratio I like to use is 1:3, which is if I'm risking something, I like to target ×3 of it. If I'm risking 20 pips on a trade, I like to target 60 pips. If I'm risking 30, I go for 90. So the first thing, this thing is step by step. The first thing, determine your entry price. From there, calculate your loss, your risk, which is your stop loss. With that, you should be able to calculate your take profit. Because by the time you get your entry price, you calculate your stop loss price by taking 10 pips away from the previous low. You get this difference, times it by 3, you get this guy. Because 28 times 3 should be 50. Is it 50? Is it 50? I think I even made a mistake. Should be 54. Not 57, 54. So if I have 54,
you are correct.
Yeah, if I have 54 to 129.8 that we're using, 54 to this guy will give me 72. So that is 129.72. This becomes my TP. So this is my profit target zone. This is my risk zone. If market moves from this point and touches this green line, I make 54 pips. If market moves from this point and touches this red line, I lose 28 pips. But mind you, 28 pips is not what will be on the one I posted to you. Are you not seeing what I meant when I said overall stop loss? It means that my stop loss is still within this area. So even if you are taken out of this trade, it doesn't mean that you will need to run away from this guy and just stop trading. No, it simply means wait for another entry and enter again. So that is where a lot of people miss it. If this guy begins to sell, let's assume this guy begins to sell from here, and you start seeing candles like this, for example, at this point, you'll be taken out. All you need to do, for as long as the candle does not, as long as price does not go below the overall stop loss. The overall stop loss, let me send it from here. Overall stop loss. Link to lower time frame. 128.56. So this was my own stop loss, right? And market has just hit it, and it's still coming down. This other stop loss, this other red line you are seeing down here, was the one I just moved from the higher time frame, the daily time frame, where I sent that signal from. As long as the candle did not go below this guy, it means I can come and take a second trade. I can come and take a second trade from somewhere around here. At that point, my new stop loss will now be this overall stop loss, since the overall stop loss is already very close to it. Is it clear?
I'm just joining now. I don't know whether you'll be talking since.
Yes.
Fine. So when somebody who wants to take much risk can decide to say the overall stop loss is not too far from the entry points we are using, since we are just starting the entries now.
Sorry, can I ask a question?
Okay, ask.
Okay, the question I want to ask is, if the candle is going below the former stop loss that I placed,
yeah,
and the trade is still going on, like you said, it does not mean that means I'm out of trade, right?
Yeah, definitely. You will be taken out.
So how do I go back to the trade while the trade is still going on?
Yeah, of course. You know, is this Ima talking?
Yes, it's Ima.
Okay, no wonder.
And so Okoro that is talking.
Yeah, Okoro. Okay. Yeah. Okay, Okoro, don't worry. You understand the entries later. The same way you enter the first trade, that's how you enter the second trade. I'm just saying that if you enter the